Hey, it's Peter Dellane, broker owner, Ability Mortgage Group. I want to talk a little bit about your loan officer and the referral that you just sent over to your loan officer. Let's say that you received a lead from Zillow and you send it over to your loan officer. The loan officer does their pre-approval and they put it over there and send off a pre-approval letter and everything's honky-dory. What I want to let you know as a realtor is that there's triggered data out there, and what that means. And what made me think about this was I saw something on Facebook that saw a loan officer was out spending a day going around to offices handing out goodies. And another good friend of mine was out on the golf course, and it made me think, is your loan officer on the golf course? It may be costing you money, and I'm going to explain why. Basically, when you refer somebody over to them and they have their credit pulled, other mortgage companies pull that credit inquiry. It's called triggered data. I honestly think it should be illegal, but it happens, and it happens often. And what happens is they solicit, and I could actually do the same thing, buy the data and solicit that person, because the credit's coded. You may not know this. It's coded as a mortgage inquiry, and then it's sold off immediately as soon as there's a credit pull. So you give your buyer over to your loan officer, and the loan officer does the pre-approval and sends it off to you. Goes about their business and spends the, whatever they do outside the office, and all of a sudden your buyer that you referred over gets a call from XYZ mortgage company saying, hey, or a letter saying, hey, we see that you're in the market for a mortgage and we wanted to go ahead and give you a quote, or whatever that scenario might be. And here's the problem for you as the agent, and here's how it sets us apart, and especially if you get a guy like me on the phone, is when a customer calls me, you may have sent them over to your lender, and they might have quoted them, and they say, that interest rate seems a little off, a little high. So they decide to either get solicited through a trigger pull, or they call around and they do some internet search and they find my company, hundreds of 5-star reviews, been around forever, and they call me. And here's where it gets real tricky. I tell them, listen, we're priced. We've collected loan estimates last year, and we were just roughly over $4,000 less cash to close. This because of the structure of the company, because I'm debt free, I have no loan officers underneath me, and I'm a wholesaler. I make that customer feel real good, and I ask them, are you obligated to use an agent? And they will say, no, I'm not obligated to use any agent. And guess what happens from there? And this is how I've referred out 47, I think it was last year, funded transactions to realtors. I'll say, are you obligated to use an agent? And they know they've talked to an agent, but they don't feel like they're obligated. So it's in my best interest to develop the rapport with that customer, and I'm going to take that customer and I'm going to refer them to an agent that I do business with. Now, remember, your loan officer's out on a golf course. And that's how, if you ever had that experience where you referred over, or let's say you're splitting, I've got another agent that, a loan officer pays $200 of their marketing fee for their Zillow leads. And that agent's priced a lot higher. And she had told me she lost 3 or 4 or 5 or 6 deals last year. She knows specifically she lost dealing with that lender, but it's kind of hard not to use them because they're picking up the tab at $200. So I did the reverse math and showed her how much money she lost by using that lender instead of just paying it herself. But at any rate, so when that customer calls me and I build the rapport with them and I tell them, look, I've got a heat map of all the agents we worked with, who's in the round robin, and refer that business back out to them. Here's even where it gets better. We are not out on the golf course. We are in the office making hundreds of outbound calls a day for several different reasons. One, we're calling buyer leads to get the buyers approved and to announce our realtors. But we also call our pre-approvals, and here's where it's real important. When we call the pre-approvals, we're calling them not because we really are, developing a little bit more rapport with the buyer, but really what I'm calling them for is to tell them about you, Mr. and Mrs. Agent, tell them the things about you that you don't want to tell them, about how great you are and all the awards you won and what a great, feedback from other customers we've worked with. I'm calling them to tell them those things, but I'm also trying to sniff out to make sure they're not cheating on you. What do I mean by that? is the fact that and this happens to us every week. Well, we're getting ready to go to an open house we've seen this weekend, because we want to know how the inventories look and how they're feeling. We will call them every week, and we're going to keep our finger on the pulse of that purchasing transaction so they don't cheat on you and you don't lose them. You would be completely shocked how many people monthly that we stop from going to other agents because they're going out looking at open houses, or they just haven't heard from their agent. They're getting ready to saw Zillow, this or that, and the next thing, and we reel them back in. We say, oh, slow down, and explain a buyer-broker relationship and the importance of that. And half these buyers, I would have to go out on a limb to say even more than half of them have absolutely no idea about a buyer-broker relationship and how it protects them, and how the sellers, the listing agent, they don't represent them. I have no clue. They think they're going to go get a better deal because they're going to talk to the listing agent and save a little bit more. And you and I both know that's never the case. What happens is 3% or 2.5%, whatever world you're in, you get that times 2. And that's exactly what happens without representation. And boy, do I have that explanation and that conversation and the importance. So my point to this, if you're getting goodies and you're getting little trinkets, or if your loan officer's not out on the golf course, what you need to do, because listen, a lot of agents are reporting back to me the market's starting to slow a little bit. I got a call, 2 calls last week from my referral partner saying, hey, PD, man, I'm not getting any showings on my listings. Also, I've got a stack of pre-approvals over there sitting there, and those buyers are starting to get picky. Feels a little top heavy to me. And in that environment, you want your loan officer in their chair calling your pre-approvals, not out on the golf course, not out giving cookies and goodies and all that stuff, that for whatever reason, you want them making outbound phone calls. We make hundreds of outbound phone calls a week to buyer leads, to pre-approvals, former customers, and that's how we refer out so much fundings, or so much closed transactions per year. We don't market, we don't co-market with realtors and stuff like that. What we do is we give them a wholesale interest rate so they're not going to cheat on you, get that trigger lead phone call and find out that, oh my God, the payment's $87 a month less, or maybe my cash to close is $6,000 less with this lender. And all of a sudden you referred them to that lender, your in-house lender or your referral partner lender, and they're not priced as aggressive as what you can get out there on the market. And then they say, oh, and then all of a sudden that lender has the conversation because you don't have a buyer broker agreement with them, or that you may not even have met the folks yet. And I'm not asking them, have you met an agent? I'm saying, are you obligated to use an agent? And they say, well, my brother's an agent and I feel obligated but awkward because he's only sold 1 house in 2 years. We get that all the time. We talk them and explain to how important it is. Do you think your brother is going to hit the timeline on a home inspection list when it's due by midnight? Do you think that his concern is going to be about getting all those items that you're trying to get, that you want on the report, done? And if that deadline's missed, guess what? You lose. So my guys are trained ninjas in this environment, with this, and we are out there doing that and spending our time on the phone building rapport. So next time you call your loan officer, you don't have to use me, but you definitely want to get yourself a broker, a wholesaler, and somebody that's been around for a long time, and that is in the office, not out on the golf course, making these phone calls, protecting your buyer and your check. Because really, what does it boil down to? When you refer a buyer to me, you hand me your paycheck for 30 days or 60 days, and you expect to get it back then. So, and I'm going to tell you, our agents love us because they know when that buyer comes in, they're getting the most professional service. They know my people. Our phones never, maybe 1 out of 100, don't get answered. We are on it 100% of the time. So I just wanted to put that out there, let you know about the trigger leads. Everybody's going to get a letter in the mail, every one of your customers, and they're going to get a aggressive solicitation phone call. And if you haven't built that rapport and your agent's not in there making a call every week, just call your agent and say, hey man, you call my pre-approvals every week? Because if you don't, you're going to lose business. And that little goodies they hand you or take you to golfing, it isn't equivalent to losing 3 to 4 deals a year times 7, 8, 9, 10 grand. You guys can do the math. Anyway, make it a great week. Have a great day. And if you need me, 410-827-5111. Take care.